morning, traders. Welcome to the TMT special edition video on gold. This is valid for Monday, July 18th. All right, so let's take a look from the last time we had our update back in a couple weeks ago in July, first week of July. I wanted to see where we are and where we may be headed now. And remember, guys, gold right now is acting as a safe haven play. A lot of uncertainty in the markets. What happened over the weekend in Turkey? Gold rallied like $6, $7, and then again, now it's sold off. Now we're down 70 cents. Remember, nothing goes straight up, and gold has almost, let's put it this way, GDX has doubled, more than doubled since January. Gold stocks have doubled, and if you continue to have this uncertainty in this safe haven play, then sure, gold will continue to be well bid up, but not before we get a little bit of a pullback. I'm going to go over the Huey index, an indicator, bullish percent, GDX, and then I'm going to go through all of the stocks, and I want to, with levels for you guys to trade with, all right? But I do like gold in the longer term as a long-term play. I think gold does go to about 1450, maybe even 1500 before pulling back, and maybe even selling off back to where we are now, to even below where we are. That's what happens with gold, okay? So very interesting. I want to mention one thing because the video would be too long. Commitment to Trader report still have the commercials, the producers, which is the smart money in this report, heavily short, still short, not like last week. I think last week was over 346,000 net contracts short. I believe it dropped a little bit, but still at these extreme levels where the speculators, the dumb money, are actually extremely long at these areas. So know how to read the report. If you don't, give me a call, send an email to support, and I'd be more than happy to explain it to you. Speculators, while the trend is early, they tend to make a lot of money. But at the extremes where basically that rubber band trade where everything is stretched, that's where they lose a ton of money. And the commercials are always short because they're hedging against what they take out of the ground, right? Same thing with oil. So I just wanted you to be clear, still heavily short. We're also seasonality. We're coming into a rough time for gold where gold does dip in July and then rallies into the end of the year. So we're looking for that big dip lower, okay? And then from there, I'm looking to buy gold, okay? So let's go right into it. Here's the Huey gold bug index. And this is the weekly chart. Just want to show you where we are from February, from 100 to 287, out of control. This needs to pull back at least to the 229, if not catch that 20 week moving average at 214. If that were to hold back in there and sustain this little cluster area of support, then I think we can go and take this local high out and then start going even higher. But look at where we are. RSI overbought, MACD overbought, slow stochastics at 96%. You're not going to buy gold up in these areas. If anything, look for a short-term play to go short gold. All right, gold itself, all right, I want to show you the gold contract. 1325, 1304 is going to need to hold. If we lose 1304, okay, we're going to see 2080 to 2090 in that area. So this is going to be the next area here. 1284, okay, is going to be a next spot. Now if we lose that, your 38% retracement of 1245, 1250 is going to come into play. All right, 1304, big key support area, then 1284, and then 1243, 1245 area in gold, the gold contract itself. Now, same thing, you still look at that by playing the ETF. Now let's take a look at the dollar. Now the dollar also has been propped up on safe haven plays as well. I do believe, though, the dollar might be ready for another big leg up. We're sitting on the 200-day moving average. We have two nice little bull flags here. And as this consolidates and starts to rise, we get a big move in gold, a big move in gold, then you're going to have a sell-off a big move in the dollar. We'll have a sell-off in gold. But again, it all depends on the uncertainty in the markets. Now, bonds, as you know, follow gold, and we need to see the rates too as well. If we get rates to start to rise, gold does not act well in a raising rate environment. So the gold will also start to sell off as well. Remember, guys, everybody's piling in on gold. It's a one-sided trade here. It will happen. There'll be a day where gold is down $20, $30, and then another day it'll be down another $20, $30. And next thing you know it, you're in the 1280, 1290, even 1300 area where you can actually start looking to nibble and to go out and buy gold. Remember, guys, one thing, the markets are made to fool the masses. And obviously this is for the longer term view, okay? Bullish percent, 96% of this indicator are on buy signals. I'm sorry, 99% are on buy signals. Okay, crazy. You do not want to buy gold at these areas. You want to buy them at deep, deep dips. Okay, where can it go? Well, let's take a look at the GDX. First, we need to see 29.80 right up in this area. 29.80, 29.50, if you will, needs to break. Okay, and then once we lose that little moving average here, the next spot's going to be, and you can see how the moving, you see how the Fibonacci retracements act well to the gap area. They're true to price here. Look at this 50% right there, literally to the penny. So these are valid areas that I want you to write down on a chart. And look what's happening here. Now we do have um, nice higher highs and higher lows, but I think we get to the trend line here. We start moving lower. That'll bring the GDX down to at least a 38% retracement. And this trend line would probably get to this point here where now you're looking at 25, 26, you're looking at about 26 bucks. So $26 here, which coincides nicely with that 50-day moving average. That's going to be my bigger target to look to buy the GDX. Okay, start nibbling in. Obviously, you got your stop's going to be way down here. But if you break, you can see that if you lose this area here, you're going to get back down to this area at $22. Okay, but let's take it one step at a time. 29.50. Let's round that off. Your next area will be 27.33, and then of course the 50, which would coincide nicely with this uptrend line of $26. Let's round that off to 26 bucks. All right. Here is your daily for your plays for the next couple of weeks. You can play this. You can see GDX has been really just kind of gyrating up and down with what gold is doing. Now you see here we have this 29. I said 29.40, 29.50. So this is the first area here, 29.50. We lose that and we lose 29. You're going to flush right back down to 28.50. And then if we lose that gap area, 28.50, 27.70 is going to be the next play. So you could see here, this whole gap area here eventually will be filled. It's only a matter of when. Okay. GDX can continue to gyrate up and down, but this gap area here is the target where I'm looking to get filled. And then, of course, the 50% on the daily would be $26, okay, which is way down here, okay, right down in this area here, all right? That's your actionable areas right now for the next couple of weeks. Here's the GLD. Same thing with the GLD. You see how the Fibonacci retracements hold really true. And this is the first area here at 124.99, 125, call it. And you can see how the Fibonacci retracements and price are exact. That's what you want to see when you're pulling these fibs. And you see we're starting to roll over now. We got a sell signal in MACD, sell signal in RSI. So lower lows and lower highs are starting to come upon us. And I wouldn't be surprised if we start to get back right back down to the 50 line, okay, right up in here as well. And then that would trigger us getting to the top of the proprietary trading average, the TMT proprietary average. So 125 area here is where I'm looking for to stall and possibly revert back to the upside. GLD, you could see that right here, 15-minute. Not much here as far as support until you get to way down here around 120. But there is a little bit here at the 125-ish, and 123 would be the 50% retracement. 123 right up in this area here. So just that's off the daily. I'll write that down. 123 right there. That's going to be another area support. Any bounces into this GLD, I'm going to be looking to short. And just make sure you get those numbers here. They are valid for the next couple of weeks. And any additional update, I'll give them. I'll get it out to you guys. Nugget, 23%. You can see how this first Nugget is notorious for filling gaps quickly. So we lose this here. We lose 2 days pivotal low of 144.71. We're going to get right to this area, and we're going to fill this gap area 127.53. And you can see how we're starting to break down on all our indicators. So we'll see what happens, guys. Be careful here. Remember, Nugget is notorious, and also gold itself. Try to get everybody long, and then bam, they start to sell them, and vice versa. I do believe that we have a pullback in the cards, and once we get rid of the pullback, we should be ready to start rocking and rolling to at least the 1400, 1450 area in gold. Have a great day, everybody. We'll talk to you soon. Take care.